Oh, it said it was. Okay.
All right. Welcome everyone to the session. Learn to invest in the stock market, a step-by-step guide. We've got a lot of very practical, helpful stuff to dive into, so let's just do it. I'm trying to get through this in 45 minutes. What I think will probably happen is that it's going to be 45 minutes of content. I'm going to open up the Q&A after. Anyone can ask anything. So if your questions have not been addressed, don't worry, there will be time. We will get to it. So let's just dive in. Okay, so to begin with, I made a lot of promises. You saw messages about this and that. So what will you actually practically learn in the next 45 minutes? So we're going to go into three simple steps to help you start and actually succeed with investing. How to build your first portfolio, or if you have a portfolio already, I know some people are coming in, they're a bit more savvy, how to improve it and some new ideas for it and how to manage this in less than 10 minutes a week, which means basically if you can put your cell phone down, which, okay, it shows up here, for a few minutes a week, that's really all that it takes to actually start to invest in. You'll see it has quite good potential. Also, I have a super program. I'll share about that. And also, for anyone that has teens, I do summer programs. So at the end, I'll share details for anyone that's interested. Okay. This session, we had about 84 registrants. Let's see, it turned out 65, 66. Maybe we have a few more in the end. We'll see. Okay, nice. And I asked most of you, what do you want out of this session? And there were requests sort of across the board from how to open a brokerage account, how do I avoid taxation issues with PFIC, how do I create my first portfolio, how do I make my existing portfolio grow more? All of these kinds of things. So how in one session will I answer this for everyone? I heard all of your comments, and I think actually there will be stuff for almost everyone here. And again, there will be a Q&A, so if there's anything that's not covered, we'll get into that as well. But okay, I've got 45 minutes, and it's actually down to like 41 right now. So let's get into this. Um, so disclaimer, the content of the stock market workshop is for educational purpose only. I'm merely citing my own personal opinion. I'm not a licensed financial advisor. This class is not intended to be used as a complete source of information on any particular company or investing vehicle. Every investment decision is your decision, your responsibility. Always research your investments, consult with a registered investment or pension advisor. All stocks and investments mentioned in the course are merely being used for illustrative purposes and are not a recommendation to buy or sell those specific securities. Any individual who chooses to invest money should do so with caution. Investing carries a high degree of risk. You may lose some or all of the money that's invested. I'm not responsible for your success or failure. Don't invest money you can't afford to lose or rely upon for your cost of living. That sounds horrible, right? That sounds like we're about to dive into a deep, dark pit. But actually, we'll see that we'll see if that's the case. Okay, so I think the question that I think most people are probably just wondering right now, you're all thinking, but maybe aren't saying aloud, is who am I? Why should you listen to me? And will this actually make you money at the end of the day? That's why we're here. So, just to share quickly a little bit about my background. So, I teach investing. I think this was a seminar for Nefesh B'Nefesh and Living Financially Smarter in Jerusalem at some point. I teach at companies, do seminars at companies like Meta, Facebook. I teach at Google, and I also teach investing at Tel Aviv University. Um, but I am not a professor. In fact, I actually started as an English teacher of all things. I'm not a finance guy. So what is sort of going on here? So my start with investing. When I was 23, I lived in Tokyo. This was my girlfriend, my now wife, Keiko. I remember I was like there, sort of free, having fun, riding scooters around at night. The Tokyo billboards were lit up like it was like Disneyland. It was incredible. But I was an English teacher, and there was very little money that I could make teaching English. That's what I was skilled at the time. And I was out one night, and I met this guy named Ken. And he lived part of the year in Japan, he lived part of the year in America, and he did it through passive income from his investments. And I was like, that sounds incredible. He had location freedom, he had time freedom, and he had financial freedom. Not 100% there, but actually he was able to travel, live several months of the year in different places. And I was like, I have no idea how he's doing this, but it was like lightning sparked. I was like, I want this. I don't know the path to get there, but I was like, I know what I want. And so he told me he's investing in the stock market. So I thought, okay. So I took the money I had as an English teacher and I'm like, I'm going to invest in the stock market so I can start to make money. And I started to invest it right around 2008. Does anyone remember what happened in the stock market in 2008? Anyone there? Let's see. We've got 70 people on Zoom. Does one person remember what happened in the stock market in 2008? Was it
Financial
Crash.
crash.
okay,
Rush.
crash.
Crash.
And what what sector of the stock market crashed? Does anyone remember? In particular?
Financial.
Yes. And as a new investor, I thought, you know what? I'm going to buy serious companies. I'm going to buy banks. Of course, banks are stable. Nothing's going to happen to them. And I remember I started to invest and I bought a few banking stocks, one of which was Washington Mutual. If you've never heard of that, it's because I bought it here, was holding it, and it went bankrupt. It was one of the few companies, it's not so frequent, that actually went bankrupt in that crash. And I remember I had a brokerage account and I was watching it and refreshing it and just seeing that number, that balance go down and down and down. And it was like, I mean, there's no one I could like yell at. It was like months and years of savings just evaporating. And I remember it was one of the like most painful and like just made me feel like sick to my stomach seeing all this money gone. There's no one I can yell at. I can't go to Washington Mutual. And I end up losing 75% of the money that I had invested. And I was like, this is horrible. This sucks. And obviously, there's people maybe like Ken or some geniuses that can figure it out. It's not for me. I mean, it just made me feel basically like I'm a joke. Like I can't get this. I thought maybe the stock market could make me rich. And look what it did. It basically just chewed me up and took money. And I was just like, I'm out of this. So I stopped investing. And then after I finished English teaching in Japan, I did an MBA, and then I started work afterwards. My first serious job, I was a marketing manager at PlayStation in San Francisco. This were I don't know if anyone recognizes this video game character. If anyone does, you can call out the name from God of War. So I was a marketing manager there, and I remember
Yes.
that I had a real job now. I mean, I was on the marketing team at PlayStation, and between me and my now wife Keiko, we saved $30,000, and I was like, "That's awesome! That's way more than I ever saved before." And I remember I was sitting there in San Francisco one night thinking, on one hand, I'm like, I've never saved $30,000 in a year. That's how much I saved in a year. But I was like, if I want to become a millionaire, I've got to save that for 33 years. And that doesn't include if I want to buy a house, buy a different car, have kids. And I remember I was lying in bed at night in the apartment we had, and just sort of like my leg was just sort of like, I guess like, twitching is not the right word, but it was like nervous anxiety. I was just like, how can I ever figure this out? Now I have what I thought was a real job with good money coming in, but I'm like, the numbers don't make any sense. How can I ever grow it to amount that's actually going to give me, just the basics in life, essentially, instead of just being on this treadmill forever? And I was sitting there, I was just worried, and I was like, I have to find a way to make money in the stock market, but I had no sort of path of how to do it. So I remember I was driving to work one day and I heard a video or it was on YouTube or some kind of thing about this postal worker, Theodore Johnson. You can look him up. He's a real person. He never earned more than $14,000 a year, but he died with $70 million. And he did it through investing. And I was just like, how is this possible? The math, 14,000 times like, I don't know, 200 years is not going to reach anywhere close to that goal. I'm like, what is going on? So I started to learn and started to understand. I kind of went down this rabbit hole where I'm like, I need to understand investing and what's going on. So what I started to learn, one of the key principles, which again is one thing that we can take away from, is that when I started to look, instead of choosing individual stocks, like I was choosing Washington Mutual, I was choosing other banking stocks, instead, I can buy the market. So this basically represents an index of the stock market. This is the NASDAQ. So we can see here In the last 5 years, just buying an index. So what this is you buy one single stock that represents, in this case, 100 technology companies. Meta, Google, Apple, all of these big names you're aware of. This gives you a little slice of each of those. In the last 5 years, it's up 170%. Who can do the math quickly? What is that on average per year? Someone. 117 divided by 5, or else I will do the math if I have to. Basically, it's like 24%, something like that, 20 in the mid 20s. Now, if I take that number back in the last 10 years, if I'm like, oh, well, maybe the market's been up well in the last 10 years, but that's a fluke. That's unusual. In the last 10 years, it's up 350%. Now, someone has to be able to answer this question. If I divide 350 by 10, how much is it up on average per year?
35%.
35.
Someone?
35.
35%.
Okay, 35%. So it was interesting. All of a sudden, a shift started to happen where I had this perception, I need to be on top of the cutting edge of companies. I need to choose individual companies that are going to shoot up. Otherwise, I'm never going to be able to make a substantial amount of money. One realization was just simple investing. Owning the market can actually do very well over time. Again, if I said to you, hey, there's some investments and they'll return you 35% a year, and it's been doing that for the last 10 years. Is that does that sound pretty good? Is that appealing? Does that sound good enough to consider for anyone?
Yes.
Definitely.
Okay, so and this is just buying the market. This is not like, hey, I'm choosing Bitcoin when it's at its low point, I'm buying and selling Tesla quickly. This is just buying an index of the overall stock market, in this case, the technology sector. So, some of the myths that I realized on this journey from feeling like I'm a joke, the stock market is never going to help me in any way, to actually starting to see results, was that I realized that like all of this baggage in my mind from what I heard from my parents, from my friends, from other people at business school that seemed to actually be bankers, the stock market doesn't care about a lot of things. It doesn't care how old you are. If you're sitting here and you're like, I'm near retirement age, or I'm in my mid 50s, or I'm only 12, my son, who's 3, has a portfolio in the stock market, it's making money. It doesn't care how old you are, you can still make money. It doesn't care if you're bad at your job, if you're bad at school. It doesn't care if you've gotten fired multiple times. It doesn't care about any of that stuff. You can still make money. If you only have $50 to start, you're like, I have no money. The stock market, how can I make money from it? We're going to see practically how with even $50, you can start to invest in some things that have very good potential. So if you're like, do I have enough to begin with? It's better to actually start when you have less money as you learn things. Of course, if you have more money, that's totally fine. But the idea that I have to have $10,000 to invest. No, you do not have to have that at all. If you want to be lazy as hell, you're like, I have a job, I have kids, I like to spend my evenings watching Netflix. Though any of those kind of things, it doesn't matter. All that matters, and also if you've tried and given up, you're like, just like me, I'm like, this was not working, I can't happen. Anytime you start with the stock market, you are starting fresh. All the stock market cares about is you need to figure out what you want to buy. You need to choose the right kind of investments, which we'll talk about. What are those kinds of things? You need to decide when is the right time to buy them. For example, you don't want to buy Tesla at $400 if you could buy it at 200. So you need to figure out when is a good time. Once you know what you want to buy, when's a good time to buy it, and then you wait. That's the game. Hopefully that's not anticlimactic and you're like, I want it to be more complicated. I want it to be harder than that. No, that's the game. And that's okay. Let's see then. Okay. So we start with Warren Buffett, who actually very interesting. He just this past week said he is no longer going to be the CEO of his investing company. He's going to transition off. But basically, Warren Buffett was asked, and for anyone that's not familiar, he's basically one of the most prominent investors that has done fantastically well investing over time. So he was asked, for money that he's not going to donate, money he's giving to his heirs when he is no longer around, how does he recommend they invest it? He said, put 10% in a bond and the rest, basically the lion's share, in a low-cost index of the S&P 500. Who can share with us what the S&P 500 is? Can
It's
anyone?
an index of the 500 most profitable companies in America, and the index is broken down based on market cap. So the bigger the company, the more you invest. Some people may claim that index funds are causing a bubble in itself. However, it is the most reliable form of money, and since 2008, it 500% its value.
That was an awesome answer. So even just to recap, what it is it's the 500 largest companies in the US stock market. Anyone in Israel can buy this. I'll show you how. There is no taxation issues. People ask about what are the things you can't buy as an American in Israel? There's things you can't buy. Everything I mentioned here, there is no taxation issue for anyone. Everyone can buy these. The thing about the S&P 500 is nice is that you can buy it once and it actually cycles in the new growing companies and cycles out ones that are not doing well automatically. So this idea of you have to watch the stock market, you need to do all of these things for that and also for the NASDAQ, which we talked about, it basically does that for you. You buy it once, and as there's great companies that emerge, they get cycled into what you already own, and lesser companies that are not doing as well get pulled out. So Warren Buffett was basically like, look, put your money into this. So the S&P in the last 5 years has done 92%. Okay, this is sort of one of the most standard accessible investments anyone can have access to. So your money basically doubled. The NASDAQ has gone up even more, 117%. Someone, just because I didn't define this before, who can share what is the NASDAQ in case anyone is not familiar? Or
It's a
let me ask a
separate
simple
stock
question. What
exchange
type of
that
companies are in the NASDAQ?
generally tech companies. It's the preferred stock exchange for tech companies and big tech.
Great. So the S&P has 11 different industries in it. Excuse me. Has technology, oil, real estate, healthcare, all of these kinds of different things. NASDAQ is basically just the technology sector, which, as you would imagine, tends to grow faster. It also goes up and down, so it's more volatile. But here's how it's done over the last 5 years. And the third one we'll look at is the Dow Jones. The Dow Jones is 30 very large companies. Think McDonald's, think American Express, Apple, very stable companies. So they're good for people that are closer to retirement, or if you're looking to buy a home in a year or two and you want stable investments. They are very big companies. They don't grow as quickly because, again, for Coca-Cola to double its business or McDonald's to double its business, it's much harder when they're already so saturated and everywhere. So we take that and we're like the S&P, 18% a year. NASDAQ, 24. Dow Jones, 14%. So you might be thinking again, well, that's the past. And it's never going to be like that again. Even though we looked at 10 years, and actually over 10 years, it's been even better. But in the last 5 years, it's been a it's been a bit of a crap time for the stock market, to be perfectly honest. In the last month with Trump tariffs, that dropped the stock market briefly 20%. So even with that, you're still looking at these kind of gains. And also in the last 5 years, you look at in 2022, the stock market had a very serious stock market crash. The NASDAQ dropped 35%. Since then, it has recovered. So these gains, it's not like it's been kind of smooth sailing. Even with bad crashes, even with all this crap that's going on with the tariffs, this is still how the market's performed. So again, all I care about is looking at data. If we're saying the assumption is, well, maybe yes, before was wonderful and it'll never be like that again. Before was not wonderful. There was also COVID. There was all kinds of things that messed up the stock market. Even with that, here's just the data on how it's done. These are investments that anyone can access. So I want to show the power of something that relates to what that UPS, not UPS, it was a delivery worker, but I don't know, maybe it was UPS, did just so we can see the potential. If I put $1,000 into the stock market and I buy the NASDAQ, which on average returns 15% per year, how much, if I put that for 50 years, now you might say, I don't want to put my money in for 50 years, that's fine. I put in $1,000, I let it sit for 50 years, and I don't add anything to it. How much do you think that $1,000 is worth in 50 years? Write in the chat because not so many people are talking. So write, give me a number you think. You can call out a number, okay? Shayna, Yakira, okay, so we're seeing a million. Again, you're putting $1,000 just to be aware of what we're actually asking. Okay, 100,000, 500,000 from Dan, or at least it's 100,000. Sherry, 2 million. Okay, let's get some more guesses in here. There's 70 people in this group. What other people think? Again, think about this. If I say for my kid, I'm going to put $1,000 and I'm going to put it into the NASDAQ, which grows about 15% on average. How much can I expect when that kid is 55? Or I guess 50 if I put it at birth. So, okay, I see Nathaniel 10x, okay. I see 5,000. Okay, so we're starting to get some guesses. Let me do this with you because I'll send you a link to this so you can also do it yourself. Hold on. Okay. I'm going to take this out. This is a great calculator to very quickly see how much money can earn you. So I'm starting with a balance here. Okay, hold on. Let me refresh and see what we've got. Everyone can see my screen, I take it, right? If you can't, let me know, but you should be able to see I'm on this page, NerdWallet, that's the URL. Okay, I put $1,000 in. Okay, I'm going to put it at 15%. And I'm going to add nothing to it. So that's nothing. And it's going to go up for 50 years. Okay, compound frequency, I'm just do annually, so it's a bit more realistic. Okay, that $1,000 compounded at the average rate that the NASDAQ goes up, I mean, it makes over $1 million. This was starting to understand how is it possible that this delivery guy could have actually gone to those numbers. These are regular investments. Again, this is not, hey, I bought Tesla when it crashed, or I'm putting all my money in Bitcoin or things like that. That's actually what regular investing in normal kinds of things can do. And if you're like, I don't want to wait 50 years, that's fine. We'll see what else we can do. But I'd say that's interesting. If we're interested in investing, that's kind of interesting. This is the opportunity. I want everyone to see that comes here. What I care about is you understand what the stock market can do for you. This is not my opinion. This is based on how it's historically done and just on data. Buying market indexes tend to outperform individual stocks. Not always, but also, so this idea that I have to be so sophisticated, I need to watch a stock, I need to buy, I need to sell, I need to do all these things, I need to get options, I have to have margin, all. No, what we're seeing is what regular investing can do. And what I want to share with you is this is a little bit of a tip for 2025. What we're also seeing is that often many investors, myself included, had this idea that, unless I invest in small companies that have the potential to really grow, I'm never going to really make that much in the stock market. When we look in 2025, one of the biggest success stories is the Magnificent Seven. This is, you can buy, just like we talked about buying a little index. What that means again is that I buy one stock and it contains many stocks within it. So I buy one thing and it gives me kind of like a shopping cart of many different things. The Magnificent Seven we can also buy, and it gives you basically seven of the most prominent tech companies. And what we're seeing that's a trend in 2025 that's very helpful is it's not about you need to find the small, risky companies. It's actually most of the money, when the stock market is nervous, goes to the big companies. Oh, am I freezing? Can you hear me or no?
Yeah, I have to go back like a minute.
Who was I frozen for everyone or no?
Yes.
Okay.
When you started talking about the Magnificent Seven, that's when you
Okay.
I
started
got
to.
you out now, but wow.
Okay, thank you for telling me. I appreciate it. Okay, so what I want to share now, first of all, you can hear me okay? It's fine?
Yeah.
Okay, cool.
Yes.
So in 2025, things that are working now, what we see, there's a misconception that, hey, I need to find small, risky companies because those are the only ones that can really grow. What we're actually seeing playing out is that it's the large companies where a lot of the money is funneling into. They've historically done well, and they're actually safer in many ways than small companies, and the returns often can be higher. So the Magnificent Seven, which I'll share with you guys in just a second, is also we can buy like a little index. What that term means again is that instead of choosing one individual company, I buy one stock and it has many little companies in it. I get a little slice of each of them. So I don't need to buy Meta and Microsoft and Nvidia and all these ones. I can buy one thing and it gives me these seven high growth stocks that have done even better than the NASDAQ. So again, just something that we're seeing that's working the market today is actually it's not about, hey, to make real gains, I need to do risky things. No, actually, a lot of the gains come from companies you'd say are actually very safe, very stable, where money is going into because it doesn't want to go into risky things. You look at the Magnificent Seven, this is from, I guess, just a couple months. It is on, hold on one second. Let me see if I can annotate this where you can see my mouse. So we can see here the Magnificent Seven in the last couple months, it's up 17% compared to the NASDAQ, which is up 9%. So again, there's things that also tend to do better than even the market indexes as part of our portfolio that are not inherently kind of like super risky types of things. So what I want to do is I want to build our portfolio together. Hold on one second. So to do that, what I want you to do, take out your phone. Here we go. Open up the camera and click on the QR code. What that will do is it will put you into a group just for this. And in that group, I will send you the specifics of actually what the things are for the NASDAQ, the S&P, and also two bonuses. One is the Magnificent Seven, and there's also another one as well. So hold on, I'll give everyone a chance. Basically, take out your phone. Okay, we can see people are joining in here. And then here I'll share with you. And as people are doing that, just to again, if you can't do this, you can WhatsApp me. I can send you the link to join. But I'll send in this group right after, or maybe tomorrow, actually an example of what you can buy that is the entire NASDAQ that costs $60 that anyone in Israel can buy. Anyone. You want to buy the S&P, you don't need hundreds of dollars. You can buy for 40 bucks. And the Magnificent Seven, the one that I just mentioned, you can buy that for 50 bucks. And I'm going to share with you some other ones. So hop in here, okay, and then we will do it. Okay, so I see most of the groups in here. I'll show one more time a little bit later to join this group also. Okay, I want to share something else. So we talked about, we're starting to define what a high growth portfolio is. That again is stable, that can go really nicely, probably more than what you expected. The first thing we need to answer as investors is, what do I want to buy? The second thing we need to answer is, when is a good time to buy it? And I want to show you something that once you see it, it's very hard to unsee, and it will change the way you start to see the stock market in a very positive way. So for anyone that doesn't get the reference of the Matrix, the stock market, there might seem chaotic, like, things are up and down or all kinds of things, but there's actually a system that's going on behind it that once you see and understand gives a lot more order than what you might see on the surface. So let's see, kind of like the Matrix, you see behind the scenes, the real world. We're going to see that in the stock market for a minute now. Okay, this is Google. Okay. In Google, hold on one second. Let me see my mouse here. Let me try one thing. Okay, that's better now. Okay. So here's Google's stock chart. Just to explain what we're looking at on the chart, every one of these bars represents one day in the stock market. So we can see on this day back in mid-September, the price was around $152, and a red bar means the price went down that day, and a green bar means it went up. So we can see the price over time, how it's changed. And right now it's $164 as of yesterday when I pulled this. When you look at this chart of Google, do you see any patterns? Anything that could help us as an investor on this chart?
Going up and down, so you can assume that it's going to go up.
Okay, we say it's going up and down. Great. Any other thoughts?
It's a double bottom. It's a pattern bottom.
Okay,
Like
okay.
Like
Someone's
every few months, it looks like it ends up being back at like 148
okay,
every few months or so. Yeah. It
okay.
Yeah,
ends
it
up with
also
the
looks
same number.
it looks like the candlesticks in the red are longer than the greens when they hit the max.
Okay, the red bars are longer. Let me ask a logical question. We have Google that's at $200 around here. And then within basically like 2 months, it drops to 140. So it loses about 30% of its value. Or if we see here, it was at 190 and it dropped to 140, so lost 50 bucks, again, like a third of its value. Then 3 months later, it went back up. Does it make sense that a company as big as Google would all of a sudden in 2 months lose 30% of its value and then 3 months later it comes back? Does that feel right or does that feel strange?
Strange.
Strange. Okay. So what I want to share, and some of you started to get at it, is that price has memory. It often returns to where it has been before. So we see when Google's price gets low, what price range does it sort of end up going back to? I know it's a little bit hard to see on here, but can you see on this side what
Maybe
price when it
about like
gets low?
140 or 144.
Okay,
148.
that's called support. When the price gets high, roughly, where does it have trouble going above? Where does it like kind of hit its top, so to speak, that we see here?
200.
About 200.
200.
Okay, okay. I'd say a little bit lower, but I hear you on 200 here. Again, it's a zone. It doesn't have to be perfect. This is called resistance. So stocks move in bands. Their prices move in bands. They move up and down within bands. And then over time, there's either fundamentally very good news about a stock or very bad news. And the stock will then move up and start trading in the next band above it. So right now, Google is trading within a band here, and we're just seeing basically that it moves up and down between those bands until there's a really big news about the company, and then the stock price ends up going into the band above it. So stock prices usually move within these bands over time. It's natural, even though it seems very crazy that Google could lose 30% of its value and then goes up 30%. That's a normal price, the normal movement of stocks within their band. So in this case, what we can see is that if I wanted to buy Google, what price would I want to buy it at? If I like Google,
The lowest.
okay?
The support band.
Around the support zone, which is around $148. Now, the first time it reaches this point, let's say we're going back in history, would I have known that this is actually the low point, or I wouldn't really have known that?
You wouldn't know.
No, yeah, exactly. You wouldn't know. What we see with stocks is that you start to see a pattern over time where it establishes a support point, and then also it has a resistance point. Once it's at the first time, I don't really have enough data to be like, okay, I see a pattern. Once it starts at the second, the third time, then you're like, if I like Google, now is the setup where I want to buy it. Because again, we're trying to answer the question, I know what I want to buy. When is the best time to buy it? So if we look at our friends Disney. Okay, now even hopefully right now, even by looking at just one other chart, where do we see any patterns in Disney's price? Where is support? What price?
Like
Around
84.
Around like 92 and like 116.
So 92
112.
is the current price. Support's always going to be a bit below it. So I heard before, we'd want to be buying
84.
around 84. And again, all I'm looking for is data. Okay, bounced. Now it's bouncing again. Where is resistance for Disney?
118.
116.
116.
Okay. Yeah. Alrighty. You got it. 116. Now, what this means is as we start to look at investments, whether it's the NASDAQ, whether it's the S&P, whether we want to buy in the Magnificent Seven, or if we want to buy a healthcare ETF or any of these kinds of things, we now start to have some tools to help us understand where there's opportunity. The average investor would probably see, wow, the price is crashing. Oh my God, this is horrible, versus understanding, no, actually, this is where the opportunity is. I want to share a bonus. This is, I think, one of the most helpful tools an investor can have. It's something called the RSI, the Relative Strength Index. What that is that it's a real-time indicator. It tells you today whether the price is likely to go up or down. And again, I'll show you anyone that joined that WhatsApp group. I'll show you how to find this, and I'll put the image up again if anyone missed it that wants to join the group. So this can sit above the stocks chart. It's in this box here, the RSI, and basically it's within this band. And what this band means is that if stocks go very low to an extreme low here, it's a signal, if we are investors, now is a good time to potentially buy, and it's probably reached its bottom. So we can see here, the RSI was at an extreme low. Did it call out the bottom pretty well? On the
Yes.
chart, did it call out the bottom? Was it accurate?
Yes.
So this is helping us to signal and give us more tools when it's a good time to consider buying. The RSI got to an extreme high. What that means is basically the price is probably going to drop now. Did it call out the top pretty accurately here?
Yes.
Basically, it says it's a ripoff. Don't buy it now. And we see the price ended up going down after that. We see here the RSI was low again, and now the price starts to rebound. If we go back in history, also, it called out the top pretty well. So this is, again, a tool that will tell you in real time. I can look at any stock, any index, anything, and the RSI doesn't work all of the time, but it works much more than it doesn't. Will also give us more confidence and data to say, okay, if I love Apple, or if I love an oil stock, is now a good time to buy. And you can see if the RSI is low, that gives you more data to say, okay, I believe in it. And now there's more chance that it's going to go up than if you're buying, especially at resistance. So we put together support and resistance and RSI to help us start to identify good buying opportunities. Does this help give a little bit more context of being able to see where the opportunities are with stocks?
How do you know that it's going to go up again?
Well, what
You
it
know,
is,
a
it's a
stock can go down and you don't know if it's going to go up.
okay. So again, we don't have a crystal ball. If there's horrible news about Disney, the stock will go down, even if it's at a low. But what tends to happen is that the stock market works between the emotions of fear and greed. So people get scared. They say, oh, there's bad news about Disney. They're not making any good movies, or blah, 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 or whatever it is. And it starts to sell off. And fear is high. Then usually that gets exhausted, and it sells off too quickly, which is called oversold. And statistically, often that's a signal that the price is going to rebound. Then what happens is people start to get greedy. They say, Disney makes a lot of money. It's a good company. At this price, it's a good buy. And also, I see there's support as well. So it gives you another data point or another puzzle piece to say, okay, it's at support, which usually the price bounces back up from, and the RSI is low. It's much more likely at this point that it will go up from here. Doesn't always happen, but I'll give one more example, and then I'm gonna. Oh wow, we're like 3 minutes left. Okay, I'm gonna be a few minutes extra, but I'll give one more example to help understand this. Professional investors that are sitting at Goldman Sachs and Morgan Stanley, they're trying to perform better than their peers at other banks. They all look at these indicators and they understand and know sort of that there's a game that's being played where if stocks are at support, or if they're at an RSI high, or other indicators they're looking at, they know their friends are probably going to sell it to make a profit because it's most likely to go down. So it also creates this sort of like snowball effect where if I'm like, look, I'm at Goldman Sachs, I'm like, I know that all my friends are about to sell the stock. I don't want to be the one holding it when they're all selling it. Then they start to sell it, and it becomes a cycle where again they're all looking at things in a similar-ish kind of way. So it becomes this kind of self-fulfilling cycle. And again, all I'm looking at is I'm not trying to convince you of anything. I'm just looking at the data. Did it call out the bottom very nicely before? Yeah. Did it call out the top very nicely before? Yeah. So we have more data that it's working than that it's not working. Okay, so so if anyone didn't catch that, if you want, I will also in the group show you how to see the RSI for any stock in real time. I just don't have enough time in the session to actually show you on the site and things like that. Just join this group. Many of you are in it. It's the exact same group as before. And then also in addition to the ones that I'm going to send you, I will also send the website so you can check the RSI on any company, any stock, anything that you're sort of interested in as well for this. Okay, so now I'll keep rolling here. So, okay, you guys got to give me 15 minutes because I put stuff in. I want this to be as awesome as possible, and I maybe need 5 or 10 minutes. Okay, so I've got an idea of a portfolio now. We started to talk about market indexes, how they can do. There's also the Magnificent Seven. I'm going to send you other ones as well, and those have done very well, and they're often much less volatile than individual stocks. Like I lost all that money with the banking stocks. How do we do this without it taking over our life? So this is the NASDAQ. Okay, this is the technology sector. This is, 10 years. It's maybe not totally current, it's 2023. Okay, the 2013, 2023. Maybe it's like, maybe the market's too high. I shouldn't buy now because it's too high. If you have that perspective here, well, it went higher, it went higher, it went higher. The market, it's a fact, goes up 71% of the time. Someone asked me, I'm trying to remember the name, if this is the same as gambling, the stock market. Gambling, the house wins. You lose more than 50% of the time. The stock market goes up and to the right. Again, there's crashes, which are natural. They're part of it. One thing that's actually kind of crazy is most crashes actually happen on Shemitah years. 2022, Shemitah. 2008, the banking crisis, Shemitah. Dot-com bubble burst, 2001, Shemitah. But that's I share in other classes that I do.
That's so cool.
But we can see that if we're all the time thinking, oh, it's too high, this is what the stock market does. It's in the government's interest, the U.S. government, the stock market to go up. Doesn't mean it doesn't go down from time to time, but if you're waiting for some mega crash, you will lose out much more than if you just invest a little bit at a time. So one option, again, keeping this very simple, just trying to be practical, you can just buy a bit at the end of every month. Take your money, divide it up, and buy a bit at the end of every month. Or you can check what you like the indexes, once a week, which will take less than 10 minutes, and you can see if they're in an RSI low or support or specific stocks you like. Let's say you have 3, 4 stocks or 2 or 3 indexes. You're like, okay, I'm looking, RSI is low, great, good time, I'm going to buy now. It can be as simple as that. That was principle number 1 I shared. Simple investing can end up doing very well for you. Does not need to be some complex game of all of this kind of stuff. And also one thing I want to make sure I address for anyone, some people ask me about guidance on choosing a brokerage account, whether in Israel or abroad. I will also send a good article that shares an overview of different brokerage accounts because you're like, look, I'm ready to go, but which one's the best one for me? I'll send that resource. I just couldn't put all of this in, and there were only a few people that asked about that, but I'm sending it too. Okay, so anyone that has been to my website, which I don't know if people have been to my website or not. My website is the Stock Boss. I am not the boss of the stock market. No one is. The name, what this name came from, what it is I was investing, and over time, by putting in market indexes, choosing a few stocks, a few different kinds of things like that, the stock market, it goes up over time. It started to generate first the equivalent of a half salary. Then it became a full salary. I started to get closer to Ken, and then all of a sudden my wife, because we had this extra amount of money coming in, started transition from full-time to part-time. Then over time, it started to become more and more. And then also I transitioned, I basically turned 40 and I stopped working in high tech. I was working as a marketing manager here for many years because the stock market, I was sitting at work and the stock market was making more than my salary. And all of a sudden, truth be told, my motivation went down dramatically. I'm like, if I work really hard, I might get a 3,000 shekel raise. Whereas if I buy Amazon stock and they do well, all of a sudden I make way more than that. And basically, I just realized the stock market essentially became more relevant to my life and it was more like a real boss than my company. I stopped working, and then people ask me, like, why, why aren't you looking for a job? And I said, I've been investing for the last 10, 15 years. Again, I made lots of mistakes. I lost money, but over time, it started to give me a nice cushion. And they just started asking me, well, what are you investing? What are you buying? And from there, I started teaching these programs. And then I started teaching, at companies. As I mentioned, I teach Tel Aviv University. And many people that apply these principles, they reach out, they're like, oh, my portfolio's up 35%. Another person they sent me recently, they made since the program, they made $100,000. I got a message from someone yesterday that made 40,000 bucks in the last 2 years. It's not instant. And I started to do programs for teens. So I'm going to share anyone that has a teen. I do summer programs. I have a summer program that's going on with about 60 teens all around Israel. 90% of them made money in the stock market. We do a virtual stock market game here, and you see they're in the green. 90% of them made money. It's not because I'm the most incredible teacher or they're somehow the super investor kids of the world. It's because over time markets go up. That's the nature of what you can do. Anyone with patience can do well in the stock market. If you have a very short time horizon, you're like, I need to make money in 2 weeks or 2 months or 6 months, then there are challenges. But over time, the stock market can make money for just about everyone. And I started teaching teens because people in my adult programs were like, I wish I learned this when I was younger. So then they're like, teach my kids. That's sort of kind of been the evolution of what's going on. So just to recap, we're 50 minutes in, not bad. So just getting very practical, starting with things like indexes, like the NASDAQ, like the S&P. And again, you can join the group. I'll share with you some other ones, an example portfolio. I can't tell you what to buy or sell, but I can share with you an example. Can do very, very well. And if you're like, look, the best gains are behind us. No, we've had quite a few crappy years in the last 5 years and beyond, and we're still seeing 35% gains on average in things like the NASDAQ. Things like the Magnificent Seven have done even better than that, and I'll share with you other ones that have too. Also, we can start to see the stock market isn't just random chaos. There are tools, and there's a limit to how much I could share in just one session without it being overwhelming, but like you'll start to see patterns. Stocks naturally move within these bands, up and down. And when you see a stock that you like and it goes down to support, you're like, okay, maybe not yet. But when it goes to support a second time and the RSI is low, and the RSI will show you in real time, all of a sudden you can start to buy things at very good prices, which again can just accelerate how much a stock market can make for you. Again, my goal is to break through beliefs that people have that are holding them back. That's my only intention in what I'm saying right now. If you're like, I don't have enough money, it's too expensive, you can, for 50 bucks, roughly, maybe the NASDAQ is $60, okay, but then the S&P and the Magnificent, for 50 bucks, you can start investing and learn and gain the skill set that will help you. You're too busy to make money, apparently. If you have 10 minutes a week, scroll a little bit less on your phone. I need a phone emoji here. It's not a part-time job. It's the only thing in life, aside from owning rental property that just pays you rent, where you do not have to trade time for money. You don't have to go into a job, put in hours to make these kind of gains. This is the reality. So if you can stop on your phone for 10 minutes a week, you have time to do it. And if you think you're too late, I'm too young, I'm too old, I'm too this, I'm too that, I'm even retired, you are not too late. The market goes up 71% of the time. There is plenty of opportunity. All the time there's opportunity. You don't think that with AI continuing to boom, there's not going to be big movements in the AI sector. You can buy an index of the AI industry. All of these things are still emerging. Okay. Hopefully that was helpful. It gives you some more tips and some help. So I've worked with over 1,000 people. And just to reflect, the things that I've seen help people make the most money in investing where they don't get tripped up is you have a clear plan with investing. You know what you're buying, when you're buying, and how much. So not every month you're rethinking, oh, am I going to buy this now? Am I going to buy that? All of that uncertainty paralyzes, can stop certain people. So you have a plan. It does not need to be that complex. You have a plan. You have, what I've seen really good success is you also have 360% support. What I mean by that is also your pensions are earning for you. So again, just on one foot, and I'll take it during the Q&A, you can change your pension to an S&P track. I can help with connecting you people that can do it for you at no cost. So taking the biggest financial levers you have, your Karen your pension, getting a brokerage account, different insurances, by taking those and applying the same principles, you can have dramatically magnified effects where I've seen people have huge differences in not such a long amount of time. And then having support and accountability, a community to help you ask questions, and especially be there when the market drops, because lately the market's dropped. You know, should you buy? Should you sell? That kind of community can really help where it's like, no, it's low. Now's the time to buy. So what's next for us? So what I offer is basically helping to take this knowledge and turn it from theory into implementing it, getting faster results, less mistakes, and make more than you probably expected you could. So what I have for people that are interested in going deeper, I have starting in mid-May a live applied investing program, a course. So what this is, it's based on some of the key principles from what I teach at Tel Aviv University, but it's more practical for investors that are investing now. So what you'll go over in the program is like four key things. How to find the best performing indexes and industries in the world. So you know what you want to buy. And that also can include individual stocks, things like that. Then taking what we've learned and building on the skill set so you know when is the best time to buy it, based on strategies from the top investing professionals. Then how to buy, how to select the right brokerage. We practice, we go in and we actually buy and sell using a virtual account. So you get the experience of not just, hey, I heard about this. You actually are buying and selling so you can implement everything. And then how to automate it so it basically doesn't take over your life. Avoid making mistakes, and basically taking years, which translates to missing big stock market rallies. The market's up dramatically in the last 2 years. So not waiting and missing those things. There's a cost to actually just waiting. So what this is involved is basically, it's a 6-part course that's live, plus I have 2 bonus classes. So it's actually 8 classes. Also, there's help in it to transform your pension, get a brokerage account, help on your insurance, and also I'm going to cover a little bit of taxation general tips with experts that will actually help you to not just know about it, but make the changes in real time for that, completely free as part of the program, and a community for support and accountability to keep you energized, a place to ask questions and hear new ideas, all of that kind of stuff. So the program basically holds your hand to implement everything and just take what we've done. All of it is going to build on the concepts I've shared, but just give you more help step by step and expand on it to actually get wins in the market. The program is 750 shekels plus VAT, which I think is actually a very low price. There are limited spots for the program. So if anyone's interested, you can message if you're interested in it. And the thing to keep in mind is the goal of this program is to create the foundation to make money in the stock market year after year after year. That's what this investment is for. Not 1 year, 2 years. People in the program, they message me 2-3 years later, like, wow, this year I also made this amount of money. That's sort of this is the goal that we're aiming towards. Years and years, basically, until you can no longer invest, the stock market can keep paying you out. So hopefully you found this helpful. I'll send, of course, on here some of those tips just practically so you can get started. The program that follows this is awesome. It has changed many people's lives, and also the teen program. I have a teen program this summer, so anyone that has a teen themselves or has friends or family that have teens, I do summer boot camps, which I'm happy to share information. But that is what I had for you tonight. And now I'll open up to questions, and anyone that needs to jump can jump. And if you didn't get in the group, take a picture of this and ask me anything that you want about anything relating to investing.
How do we sign up for your course?
Just put in the WhatsApp, just say I want to join, and I'll send you information.
What WhatsApp?
This group right here.
Mhm.
Also,
or message me directly, it's also fine. But if you do
How
in the group,
long
it's
is
easier for
the
me
course?
What's that?
How long is the course?
The course is, so it's, I'll just show you what it is. The course is 6 parts, 6 live classes plus 2 digital classes. We'll probably start in probably a week or so, week or two, based on what people want. We'll do it either maybe on we'll figure out the night that's the most convenient, but let's say maybe like a Tuesday. I want to do it on a day when the market's open. So Sunday the market's not open. Thursday usually people are busy. That way we can look at the market live together, all that kind of stuff.
On the course,
Yeah.
does it actually explain literally step by step, as in this is how you transfer the money from your credit card or your bank account to the trading when you're opening up an account, exactly step by step?
This is what it will help you with. It will help you to identify the right brokerage account for you. That means the right company to buy and sell stocks with. Also, with most of the companies, there's relationships I have with them, or like I guess a good English speaking rep that can help answer questions. So you're like, okay, I'm kind of interested in this one, but I want to know, I'm British and Israeli. Is there any kind of implications or whatever? They can help answer the questions for you. I am not part of the process of transferring money over, but they can tell you, okay, here's how to actually transfer the money over. But I will help you to identify one. You will have all the things you need to open one, and there will be, for most of them, an English-speaking person that works there that can answer your questions stress-free, no pressure, that kind of situation.
Does Webull work in Israel, or is that something else that you're talking about? Like Webull?
Does what?
Webull, the app Webull.
Oh, Webull I don't think works in Israel. If you open it abroad, so for example, you might go abroad and then you can open accounts when you're abroad, but often if you open an account, even if you're, let's say, American or British or something like that, they will look at your VPN on your phone and say you're not in the country, like the US or UK, so they will not let you open the account when you are abroad. Not always the case.
Sorry, I got confused. eToro is the one that works in Israel, I think.
I actually don't know if eToro does. eToro absolutely works in the US, but I'll look it up and I'll put it to the group.
Like the only passport I hold is Israeli. Yes, I do have a South African passport, but I don't have a bank there, so
that's no problem. If you are just Israeli citizen, there are plenty of options as well. So no, again, people in the program have been just one nationality. Israeli have been dual, South African, British, Belgian, US, Australian. There's solutions for everyone.
Can you
everyone will have a
invest
solution.
in all the stock markets around the world, or just the American stock markets, or?
So typically what we want to do as investors is we care about what's going to make us the most money. It's like that's what I fundamentally care about. What you can do is with most of these accounts, you can buy Israeli stocks. So you can buy in the Israeli stock market and you can buy on the US ones. You can also buy on other ones, but fundamentally we're just going to start to look and be like, what's going to help our portfolios the most? And that's where we want to funnel money to. But
I
you
know
will have
people-
access to buy Israeli stocks if you want, and US. Those are the primary ones.
And
Excuse me?
Tesla and Nvidia.
All of it.
American.
No, what do you think?
What do I think?
Yeah.
I think that it's a question of proportion. I am in favor of buying individual stocks, no problem with it, but it's a problem when it becomes too big a part of your portfolio. So if you said to me, again, I believe in Tesla, I believe in Nvidia, both of them have done well. What I would say is if you buy something like the Magnificent Seven, it gives you exposure to them and the other big tech companies that'll be less volatile. So that's one thing to keep in mind. That might be a better approach. Although, who knows, NVIDIA might go up more than that, but that gives you less up and down movement. The second thing
Berkshire Hathaway.
is that it's also depending on how much your portfolio. If you're like, look, 5% of my portfolio is in NVIDIA and Tesla. Okay, if you tell me 25%, that starts to become problematic because again, they can swing and shift. NVIDIA, Tesla dropped by 50% in the last
I
2
know,
months.
yeah.
So
Yeah,
it's
I
a
know.
question of 5%, sure. If it's 15, 20, 30,
Malcolm.
want to be careful. Yes. Please, if you can turn on your camera. I want to see you guys because the whole time
Oh,
I'm
sorry.
doing the
It's just my
I
camera's
actually, because I
really bad.
recorded, I only see my face, so I don't see anyone. I'd love to see you guys a little bit.
Okay.
This is
My
fun part for
question
me.
is, a company like LVMH or Berkshire Hathaway, who are basically massive holding companies, and it's kind of like it's
like a little index.
It's like an index.
Yes.
Would you feel differently on a holding company like that over a more traditional company?
Okay, so just to clarify for anyone that is not as familiar with what Amit is mentioning, so if you buy Warren Buffett's stock, he owns ownership in many different companies, Coca-Cola, American Express, all different kinds of ones like that. He basically creates a little mini index. I am very much in favor of Warren Buffett. He's actually done better than the NASDAQ in the last 5 years. And so again, that can go into that category of different stocks that sorry, not stock, that count sort of like indexes.
Because you've got, for example, Yum Brands, who is a holding company for multiple fast food chains. So it's as if you were to invest in the fast food.
Let me give on one foot an answer, and also speaks to actually what's in our next class together with all of you. The next class, what we go into is the idea of what's the next level of building our portfolio. We want the market indexes. That gives us exposure and it does very well. Then we might decide, I believe in the AI industry. Or as Amit said, I believe in the food industry. We want to then choose a few different industries that we think are positioned to grow even more than the NASDAQ. Maybe you believe in crypto, so there's the Bitcoin, the crypto industry. You can buy little indexes. So instead of, I come from video games. Instead of me choosing that I want to buy Sony stock or I want to buy Nintendo stock, I can buy one little mini index that has Nintendo and Sony and Electronic Arts and Take-Two and all of these ones together. And that's kind of a second important ingredient in our portfolio. You don't have to have it, but logically, we want to own the whole market. And then we might want to make a few kind of bets is the wrong term, but we want to make a few decisions on, okay, I believe in the AI industry. Well, there's a ticker, there's an AI ETF you can buy. So that gives you a chance to then get a little bit more exposure in a few different kinds of areas. That stuff to me is a great way to invest. And then the smallest part are those individual stocks, which again, I'm not against, but if you have 20% of your stock in, I don't know, what's Starbucks. Starbucks has done well and it's also done badly. So that's where you start to have a risk.
Hi, Michael.
What's the difference?
Sure, Rachel.
Can I ask a question?
Sorry, when it comes to capital gains tax, so how do our banks here and Israel, how does that work if we hopefully gain?
Okay, so put your camera on if you can, Rachel, but if you can't, that's also okay. Okay, so capital gains tax. If you are within 10 years of Aliyah, you are shielded. Again, I'm not a tax expert, but here's in general some guiding ideas.
No, I'm after 10 years.
Okay, so I'll one sentence on that, and then I'll answer specifically. If you're within 10 years of Aliyah, if you make money in the stock market abroad, so if I have a U.S. brokerage account and I make money, you will get charged, you'll get taxed in that country, but not in Israel, which often is less. The taxation is lower than Israel. After 10 years, or if you're investing in Israel, there's a flat 25% tax on money you make. So I make $100 buying Amazon and selling it. I make $100. I have to pay 25% tax. There's no getting around it. Again, if I'm in America and I own it for a while, maybe I'll pay 15%, but I'm still paying tax anyway. So the thing to be aware of is, let's say I made $100 on Amazon and I lost $100 on Apple. That will offset each other automatically so that I will not pay tax. It's not like you pay tax on the good stuff and you don't pay tax on the bad stuff. It offsets, and it's like, okay, in total, how much did you make? If you made money, then it's a flat 25%. And many of the brokerage accounts, which again we'll get into more, will do the taxes for you automatically. So you don't have to necessarily have if you're not filing taxes, that still is okay. They will do it, and you don't even have to think about it.
Excellent. Thank you.
Do
Sure.
I necessarily need a brokerage firm?
I will take all questions, by the way. I'm not, let's see, it's 9:30. My wife in a little bit's going to kill me, but sorry. Orly.
Yeah, first, thank you so much for this class. It's really helpful.
Sure.
I had a question. You said that at every end of the month, you should like look at the stock market and the RSI and all those other things. Should you, like, let's say I have a sum that I plan on investing. Instead of investing it all at once, I should break it up into smaller portions and then invest. Like, what's the logic behind that, and what's the differences?
Sure. So there's layers to the answer, but to give you just some practical stuff, what I typically recommend is if you have a lump sum of money. So again, let's say the amount is, I'm just throwing out a random number, 10,000 shekels. What I recommend is to take that and usually divide it up by about 6 months. And every month, put a little bit of that into the market. And what you can do is the simplest way is say, you know what, I decided I want to buy some NASDAQ, I want to buy some SP, maybe I want to buy some Warren Buffett, and maybe I want to buy an AI index. You can simply say at the end of each month, I'm just going to put the money in. Doesn't matter whether the market's up or down. What you could also do is you can say, you know, I'm going to watch the market 10 minutes a week. I'm going to look, on a Tuesday or something like that. And I'm going to see, are a few of these down now? Okay, nothing's down now. I wait. Next week, this AI industry is down. I'm going to put money in. And if none of them are down by the end of the month, you just put in anyway. Just to give one kind of example, Orly, to, I think, drive this point home, is when we look here, we don't need Jonah Hill laughing and giggling anymore, but let's see. Would I have won, so to speak, in this game hold on, I'm sharing screen, right? You can see my screen?
Yes.
Okay. If I was always waiting, it's high, it's high, it's high, it's high. No, I gotta wait, it's gonna crash. Even when it crashed, if you'd bought a year before, you'd still have made money. So fundamentally, we want to create a habit of putting in money regularly. That's part of what we do in the program. I've had so many people that come to me and they're like, I took your class, I got excited, I put money in, I had 25,000 shekel, it turned to 40,000 shekel, but I only invested that one time, and if I just consistently invested more and more over time, the number would just be much higher. So part of what we want to do is build that habit of every month putting in, and some months it's going to be down. You can see this one, the stock market crashed. So if it crashed, okay, I put in again, a little bit, and then it recovers. So if we're always waiting for it to be low, you will just keep waiting forever. And the truth is, psychologically, when it starts to go down, there's a lot of people that are like, maybe it's going to go lower. I don't want to put money in. That will also paralyze them. So that's why every month we're putting into the
So you
market. We're dividing
recommend
it up.
for the 10 minutes that you say that you have to put in every week is you choose the index or the bonds, the stocks that you want, and then every week the 10 minutes that you give is to actually look and see if they're up or down, and then to know it by the end of the month where I should invest that specific month.
Right now, I feel like someone learned something in the session. That is exactly kind of the idea. Thank you.
Okay, thank you.
Yeah, sure.
Wait,
Okay.
May I ask
got
a
a
question?
question.
Sorry. Amit, you asked, I think, one or two before. I just want to make sure everyone gets through.
Okay, no, it was about the previous question.
Let me. I'll cycle back to
Okay,
just so I can let. Thanks. Yes.
I asked the question whether it's necessary to have a brokerage firm. You can't do this all
Selwyn.
yourself. Yeah.
I remember seeing your name. I was like, it's quite a unique name. I remember when I first saw.
Typically South African.
So you have to have a brokerage account to buy stocks. You cannot, I can't go to Amazon directly and say, let me buy stocks from you. Just like, this is not a great example, but you have to go to Alibaba to be able to buy their merchandise. You have to go to Amazon to buy the merchandise on there. There are stock markets like the New York Stock Exchange, the NASDAQ, the Tel Aviv Stock Exchange. you need to have a brokerage account, and from there they buy the stocks.
No, but what I mean is I don't need a brokerage firm. I can open an account at, say, our bank at Lumi and have a.
You can open with an Israeli bank account. It's true. Usually the fees
Yeah.
are quite a bit higher though.
Yeah,
And there's extra ones. So you can, but over time, if you're going to start to invest regularly, that's sort of why there's other ones that I recommend. But if you're like, look, I just want to get in and start, you can do it. It's fine. But I want to save you money, so I'm a little bit like, okay, you can, but okay, who else?
Great advice. Thank you.
What is the difference? Let's say you say to invest once a month, but what is the difference? Let's say if you take a lump sum and invest it all in the same index, or you invest in the same index once a month.
Okay. I'm also just trying to be careful with some of these answers because I don't want to layer on too much complexity because as you can imagine, if you're if you're learning some new skill and all of a sudden someone gives you 5 or 6 different things that over time you learn one at a time, they make sense, but at once it can be a bit much to take in. So what I will say in general is some of the principles that I think can work, I've seen work well, is you end up having a basket of different indexes, different industries you like, and maybe different stocks. This does not have to be some kind of huge 20 different things. This can be 5 different industries and 3 or 4 different stocks. In a given month, usually what I do, and it's part of what we practically practice in the program, is I'm looking at, let's say, an AI index. I'm looking at Warren Buffett's company. I'm looking at one for healthcare. I'm looking at one for oil. And in a given month, I'm seeing, oil's down right now. Great, I want to buy that, along with buying the market index of like the NASDAQ. So I'm always buying the market index every single month. And then I'm choosing between a small batch of other ones, which one has the nice setup where it's at support, the RSI is low. And then the next month, maybe oil shot up and now AI is down or healthcare is down. But sometimes I will add to some of those ones more than once because I still believe in them.
Thank you.
Somebody,
Can you please give the names of the brokerage accounts that you recommend or maybe the link in WhatsApp?
What I'll do, Dan, is if you're in the group that I put up, I will send an article that has some helpful guidance on brokerages because it has more nuance than me just saying this and that one. And also, I have some people at these accounts where you can just, I can give you their WhatsApp, you can just ask them questions. If anyone didn't get into that group, let me just share it here again. The group will help you.
Malcolm, if you miss a class, will it be recorded so we can at least take advantage of it?
Shari, what do you think?
What do I think? I think yes.
Yes, of course.
There you go.
Wait, doesn't, for example, Pepper, which is like Pepper Pay, have also Pepper Invest? Where it's kind of like Robinhood, but in Israel.
Pepper is a good brokerage, but Pepper, I believe, is actually closing. Pepper was one that I really liked and recommended. If you find information otherwise, I think that actually it's not going to be active for that much longer. Another one that's kind of good is Bank 10. Another one can also be Interactive Brokers. Again, I'll share it and we can discuss and I can give some guidance.
Malcolm, can you what about these like money market or like funds? In Hebrew, it's like Karen this or Karen that, as opposed to individual.
Right. So this
and also the second part of it is bonds. What about they talk about bonds as well, not just stuff.
Okay.
Those are my 2 questions.
There's 2 aspects that I think are important to touch on with answering this. One is age is an important factor. If you have a portfolio that you want to keep safe and not go up and down very much, and maybe it won't grow as much, that's a very legitimate and important factor to consider. For people that's not so much a factor to consider, that's also just something to keep in mind. So in general, bonds, as a general category, do not perform anywhere close to as good as the stock market does. Even when the stock market crashes, bonds might protect you a little bit, but even after a year or 2, usually the stock market's recovered, and bonds, because they don't go up very much, tend to not do that well. An option to consider is that there's certain companies that pay dividends. Dividend is the equivalent of like a rent check. If you own the stock, it can just pay you passive income as long as you own the stock. There's some that pay 7%. There's some that even pay around 10%, that which can pay quite a bit more than a bond. So again, it's hard for me to like say this bond is good, that bond's not. But as an asset category, bonds tend not to do that well unless you're really just trying to conserve your money and kind of keep it stable, which can be a totally legitimate thing. Again, just to get specific, dividend ETFs or dividend indexes can usually pay more than bonds and tend to do better. The other thing that you mentioned was like things like Kupat Gamel, Kupat Lashka, and also relates to pension. So
No,
what I
I meant the
recommend in
ETFs. I meant like what you said about ETFs. So that's what I meant. But the other is interesting too.
Oh, so like people ask me like, hey, I have a Coupon Gamble or I have these different accounts. Are they good? Should I keep them? Things like that. I'm not in favor of making drastic movements where it's like change everything. No, what we want to do is we want to do an experiment. We want to say, here is a new approach to investing. Let's try it. Let's see if this is actually helpful. Is it working? Then we get data. We say, oh, this is growing. This is good. Or this was a bit challenging. But we then actually we do that and then we say, okay. Now let's take another step once we see evidence of how it's doing. With things like a pension, a Coupon Gamble, the first thing that I think about is not let's change it, let's do this, let's put it into the NASDAQ. It's take it and find out how well it's done in the last 3 years or 5 years. And then just compare that to the S&P. So if I go right here to, let's see here, I'm going to you guys can see my screen again, yeah? So if I go to the S&P, which anyone can buy, anyone in Israel can buy, and I'm like, in the last 5 years, it's up 91%. And again, this is with the big stock market crash. This is with the problem with the tariffs, all this stuff. Now, if I have that as a data point that anyone can buy this, then I can start to think about, okay, are my other accounts performing up to that level? Because if they're not, then you can think whether it makes sense to still be in those accounts or you can change them. So you have a benchmark to start to think about what will help you the most.
Okay. What about the ETFs? What you started to talk about them also?
Which ETFs? I've said different stuff about different things. I'm not even sure. Now everything's a blur.
I don't know. I mean, no, because there's you can buy an index, you can buy individual stocks, but you can also buy something. I don't know what they are exactly, but
Think about it like this.
they're called.
There's different terms. And I don't want to confuse people. There's an index. Okay, and there's also ETFs. Think of those as
Right.
sort of meaning the same thing. They're not exactly the same, but for our purposes, what that means is you buy one thing in the stock market and it represents many different companies. It gives you a slice of all of these different ones. So I can buy an index of the stock market of the S&P, where I would actually buy the ETF of it, or I can buy an index or an ETF of a specific industry that I think is going to do well. But think of those terms as basically the same as just you have a cart of many different stocks that you just buy one and you get a piece of many.
Okay, but I know that American people with U.S. citizenship are not allowed to buy ETFs of a foreign country.
You cannot buy, okay, so that's a great point. A lot of people are concerned about there's like taxation issues and like this thing PFIC. First of all, everything that I've shared, everything in my program are things any American buy, any European can buy. There's no issue for anyone that's in Israel that's buying this stuff. As an American, if you buy an ETF or an index of another country, so in Israel, you buy that, then there is a taxation issue. So if you're an American and you have a Coupon Gemel, that is in that categorization where you can have extra taxation problems. I'm not a tax expert, but again, if you have one of those things, it's something to be aware of. But if you buy any of the things that I'm mentioning, there's no problem for anyone. It's just as an American buying a non-US based index, which in Israel, that's like a Coupon Gamble, or if you buy on the Israeli Stock Exchange, that kind of thing too. Danielle, you made it see you there. Hi. Okay, I am going to end this at 10, but if there's still a question or two, I'll take.
I just had a question
Can I ask?
about the RSI.
Okay, and
Where
then
do you see
Hallie, I
that
saw you were
when you
about to ask. You can ask after. Amy, yeah, sorry. What's your question?
so where do you see the RSI when you're Googling like you just did? Where do you
Okay,
look for that?
so I will share in the WhatsApp group, but I'll show
Yeah.
you now as well. So on websites, one which is a great one to use, called TradingView. On TradingView, you can see all the charts and different things. You guys, you can see my screen, yeah?
Yeah.
Okay, so I
What's it
do
called?
Apple. I put an Apple stock. I can see the RSI for Apple at the top. This is in real time. This is as of the price today. So it said, hey, Apple's probably hit its bottom around here. Was that accurate so far? Pretty accurate to me. It said here, it's probably going to drop in price. Did it drop after that? Pretty accurate. I think I chose ones for like Disney for today's thing. Again, you see, it's not like these are not doctored. This was the one for here. Here was at the high before. I think I just did a bigger chart so we could see. And you can see here, you can put in support. Again, you'll learn all of these things, but see like, okay, here's kind of where it bounces. I'll move this up a little bit. But basically, to answer your question on TradingView, and I'll show you how to do it, but if you go here, you put in a stock and then you type in RSI, Relative Strength Index, it comes on your chart, and then you can move it up. I can look at what it is for NVIDIA. Actually, yeah, NVIDIA. Okay, here, let's see. So we can see there's a support point around here. Kind of called the bottoms okay. Didn't get that extreme, but okay. So that's where we find on tradingview.com.
Thank you.
Sure.
Malcolm, can I ask a question?
Mindy, yes, in 1 second. Just let Hallie, because I think she asked, and then we'll go straight to you.
Thank you. Say I was interested in addition to a long-term investment, what would you recommend for a short-term investment?
So what you can do is apply these same principles that I shared about support and resistance and RSI to be like, oh, now I believe in Shopify stock, or I believe in Snapchat stock, or whatever it is. You can see on the charts how when they're getting to the low point, and you can basically buy it at the RSI low and then sell it at the RSI high for more shorter term investing.
But I still need to do the research to figure out what it is I think it makes sense to invest in short-term.
Yes, because again, you wouldn't want someone to say, I'm going to take some of your money. I'm going to put it into this company called Zemo. That's not even a real company. And you'd be like, well, do I want someone to put my money into Zemo? I don't know. So it's like, there's probably companies that you like, that you're aware of, stuff like that. You just look them up and then you can see. There's also stuff with shorter term trading where, but I'm not, it's just, it's too complicated to talk about now. But even what I shared is a good foundation starts to be like, okay, I don't want to just do long term. I can also do shorter term. And again, I've got no issue with that in terms of, people can do very well, but it's a proportion thing. So if you come to me and you're like, Hallie's like, Malcolm, I've got 50% of my portfolio in individual stocks. And like, then I'm like, just be careful. Because again, they can be very volatile. If you're like, look, I've got some market indexes, I've got a few industries that I like, and I've got 5 stocks, and it makes up 15%. Cool, go for it. Just when it's a flip and it makes up 85%, then it's like, I've been there, and it's yeah. Mindy.
How basic is this course going to be? Because I feel like everyone's light years ahead of me. I am clueless. I have never invested. And
I don't know.
By the way, Mindy, thank you. I want to just say thank you. I think you asked that question on living financially smarter, and then it got quite a few people that were interested. So just thank you for that. Let me ask you a question. What I shared, forget the questions that have been asked. The logic of what I shared, did it make sense?
yes,
That's the logic of
absolutely.
what I'm going to share builds
I
from
got
that.
it in theory. Like, I don't know if I would go to a page and look and know what to do if I would get it, but I'm understanding the concept.
Yes, we have to practice. So again, it's like,
Right.
you go to the gym and you're lifting weights and, you have like muscle memory. After you do something a few times, it's much easier. You can do it. For me to say go now and just like, again, I want to give people the tools and open your eyes to what is possible. So I'm like, look, here's RSI. It can really help you. Here are different things. So you have real things you can use. But in truth, what I try and help people with is let's practice it together. You're learning a life skill that can make you a lot of money. And if you just spend like, again, the program is like 6 hours, we will go and we will practice it together. So the short answer to your question is, if the logic of what I said made sense, each class, we're going to take that and build one more brick on that foundation. But what we will implement is we will practice it. So we will have a situation where we're going to, let's look at a few companies. Let's actually, you on your own will practice trying to find out where the time is to buy and where the time is to sell. And then I will give you feedback. And you'll be, oh, okay, I missed that. So it's
Perfect. Okay.
Yeah.
Thank you.
Sure.
Malcolm, I saw on your website, I don't remember exactly, that you had different courses what's on your website is what you're going to be teaching us? Or that's a
So
different
I have sort of two options that for people that are kind of learning and kind of in like learning and medium stages. I have
Okay.
one program that's a pre-recorded course that's about like I think it's like $160 or something like that. But it's sort of like it's like a 90-minute session about how to create a portfolio. What really is the most effective course is the live course where we do it together. I
That we're
actually
gonna
made a
do.
decision and I
Okay.
try to price them not so differently so that it's
Okay.
not such a jump because the other one, the live course is just like years beyond what you will get in the other one.
I
But
got
some
it.
people that are like, look, I'm on the go and I want to do it. I want to get it for someone as a gift. That's kind of that.
Yeah. I
That
got
kind of
it.
thing.
Okay. Got it.
Sure. And
Yeah.
also, I want to mention as well, and maybe for Danielle, I do have the teen program. So again, each summer I do like teen boot camps that are like 5-day programs. I do 2 or 3 of them during the summer. If you've got teens, other teens that could benefit from this. There's kids from all over Israel. There's even kids that are abroad that either join from abroad or even some that come to Israel and then join the program. It's an awesome one to consider as just a follow-up to what
It's
are
in
some of the
English?
other programs. Yes, it's in
In
English.
English, the course for teens? In English?
Yeah, in English.
Okay.
Yeah. Final question from anyone that
I
has.
have a question.
Sure, Barry.
Hi. Just like the stocks you mentioned, like the S&P or NASDAQ, they don't provide dividends, right?
So
I
like the
see.
S&P, I think provides maybe like less than 1% dividend, maybe 0.7. The NASDAQ also like it's very small amounts, but yeah.
So I guess my question is like, kind of like, if you go real estate, you put your investment and then you get like a monthly regular basis kind of income.
Yeah.
And if you wanted to do that kind of equivalent to stocks, like how would you practically do that? Like you would invest in stocks that do provide the dividends, or if you go to these S&Ps, you would just sell stocks every month? Like what's
So
practically
those who stayed long here, the 36 of you that are left, okay, you're going to get one last, I
the
think,
survivors?
little bonus for sticking with me. And all of you guys hopefully are going to be in the program as well. This is just the beginning of it. But okay, I'm going to share one other thing that I think is going to be helpful. So what you can do is look, if I look at the S&P here, you guys can see my screen. This has gone up about 20% a year on average the last 5 years. The NASDAQ's even more. Here we go, NASDAQ. And I'll just do this one's a lower cost one. There's one that's $60 as well, or 5 years. Hold on. This has not been around for 5 years, so I'm gonna do the regular NASDAQ. Okay, that's up 114, went down slightly today. Okay, so that's 23% per year. So again, this is a benchmark. The S&P was like 18, 19%. This is about 23%. Now you can buy things like JEPQ, dividend ETF, and my mother, who's on this still here, Cheryl, if you see her, Morris, this is actually one that she is a fan of. This is a dividend ETF. And you can see that it pays, it's not going to stay this high, so don't get misled. It's paying a 14%
Wow.
dividend.
Wow.
So this is JP Morgan. It's not a random small company. I'll do JEPI. This is another one. Dividend yield pays about an 8% dividend. So you could just own a combination of these that pays out about 10% on average. It's like a rent check. Again, these can also go up in value. JEPI chart. So it doesn't usually go up too much, but let's see it's up 10% in the last 5 years. So it's up 2% per year. Again, the main goal is for it to be stable more than anything, but these can start to give you more reoccurring revenue streams. But then you have to think, okay, that 10%, if you don't need the money in the short term, investing in the S&P or the NASDAQ has historically paid out more. But if you're like, look, I want passive income now, you can see practical examples of ones that just do that.
Right. So maybe you would just split your account and maybe like figure out the amount you need, that monthly income, and then split it in that way. So you have that monthly income, but then also invest in the S&Ps that are much higher
totally.
chances to grow. Okay,
Yeah.
cool. Great. Thank you so much.
Was this
One
helpful
last
for everyone?
question.
Was it last
question from me.
Okay.
Yes, thank you very much.
Okay,
Thank
I'll
you.
take one last, but I'll let people jump if you need to. What was it helpful? Was this new? Did it like
Yes, very.
Excellent.
Yes, very helpful.
Will you send on the
Excellent.
WhatsApp the dates and where to sign up for the 6-part course?
put on the WhatsApp that you're interested? I'll send details on that probably in a day or so.
Okay,
It was
thank you.
very enlightening, but it's like a foreign language for me.
Well, again, Rena, the question I have that was sort of similar to Mindy is forget all these questions that have been asked. Was the logic of what I shared, even if you don't know how to apply it, could you understand the logic?
Yes.
So
Pretty
if you can
simple.
understand the logic, my promise to you is, again, if you want to continue, you will be able to get this. Again, everyone that asks questions, it's great and it helps for people at different levels. My job is to teach you the concept so you get it, and then give you a chance to practice it so you learn and experience and then could put it into practice. So even with what you said, Rena, it actually brings up a good point about if this made sense, the entire program will make sense. It's a similar let's say simple, intuitive, logical flow, not weird investing. I don't know what's going on. There's some banker yelling at me about buy, sell, whatever. That's not, again, where did I start? I was an English teacher. So I was not trained in this. I learned through many mistakes and yes. All right.
For me as well,
Okay.
it's
Can I ask a little question?
no,
No, okay. I'll leave you alone.
Yes, Roz, you haven't asked a question. What's up?
No, just a little thing. I'm just curious why you didn't talk at all about putting limits on things, like just estimating where you think the low point's going to be in putting the limit in. You didn't.
So we do get into that, but in truth, even a part of how I structure the stuff is like if I put too much detail up front, that is sort of like a bit more of an advanced concept. We do get into it and stops and limits and all that kind of stuff. But I think at the outset, even showing the foundation of here's how prices move, here's support, and then, well, what happens if it drops? Someone asked me that. What happens if it goes down? So there's things we can do to protect ourselves, put in stops or other things like that. So it's there, but you're already a step or two ahead. All right. Thank you, everyone.
Thank you.
Thank you so much. To give us a recording.
Yes, I'll send you a recording and tomorrow or in a day after, something like that.
Thank you, Malcolm.
Thank you.
Thank you very much.
Thanks, everyone. Have a good one.
Thank you. This was really informative. Thank you.